Stockbroking companies in Malaysia are currently undergoing a consolidation process, spurred by the national regulating body for the capital market, the Securities Commission. This was part of the move towards the establishment of universal brokers in Malaysia to ensure that local brokers have enough strength and competitiveness. The ongoing consolidation of stockbroking companies might mean that investors be left with less alternatives, as there will be fewer stock brokerages around. But the consolidation also brings greater benefits and convenience to users, especially retail investors. In line with the advancement in electronic commerce and knowledge economy, local stockbrokers have now started to offer investors the convenience of trading shares online over the internet.
Internet as a tool for conducting business is definitely gaining ground, and it has shown in the more developed countries like the US, a lot of financial products are now being sold via the internet, whether it's buying and selling of unit trusts or buying and selling of stocks.
The online stock trading facility offers customers the ability to have greater control over their investment activities. It enables them not only to execute transactions online, but more importantly, to have access to a wealth of financial information in the form of fundamental and technical research analysis, charts, as well as real-time codes, which are vital in making a wise buying or selling decision.
With internet trading coming up, initiated by the brokers themselves, what we feel is that people do not only want to trade on the internet, but they also want to be able to control the information they get, basically control their investment decisions before they trade.
Cyber stock trading facilities are currently offered by several stockbroking companies like K&N Kenanga Berhad, Huang DBS Securities, Maybank Securities, TA Securities, and more recently by Affin UOB Securities. One of the online trading services available currently is CanNet, which is the online option offered to registered customers of K&N Kenanga Berhad.
What the crisis has taught us for the past 2 years is that a lot of investors lost a lot of money in the market because they were not equipped with sound research. Most of them relied on word of mouth, which is not necessarily very true. So with CanNet, we try and bypass that. We make the investors, the clients, more equipped, more knowledgeable to alleviate all these problems.
With the advent of internet securities trading, one big question arises. Will it eliminate the role and function of remisiers and analysts? Well, it's not likely.
Now, what the analysts normally provide is that knowledge, right? You can be seeing a company. I give you an example. For example, if you go to a supermarket, you find that this particular product is doing very, very well, and you say, probably, but then the thing is that this is information. But if an analyst come and tell you that the company that makes this product is worth this and this, and its cost structure is this and this. So basically what he's doing is he is putting all this information and turning it over its head to give you what we call a recommendation. And this recommendation would be the thing which you may want to act upon at the end of the day, and which hopefully would enrich you.
Access to the internet allows an investor to get a variety of recommendations through various portals, and therefore be able to compare before picking the best that suits his or her interest before executing a transaction.
With online trading, of course, you can have a lot of information at your fingertips. If you go to the right service provider, there will be a lot of tools, analytical tools, like charting tools, for example, which you can have at your fingertips. You can also personalize the information that you want to receive.
I suppose the attractiveness of online trading will be for those who have the skills. I'm not talking about IT skills, but the skills to gather information which is freely available online, and then make what we call knowledgeable investment based on information that's available.
Interesting it surely sounds, but that's maybe so only for those techno and internet savvy.
The cons, I suppose, will be that not everybody is internet savvy or IT savvy. So a lot of us may find that having to navigate the content or the tools that are available on the site or on the portal may be too much of a challenge,
Malaysia, as well as other countries in Southeast Asia, are undeniably still lagging behind as far as internet securities trading is concerned.
And I think today the leaders are definitely Korea and Japan. In Singapore, the government has, like in Malaysia, set in motion the deregulation, which would enable people to trade online at rates which will be competitive compared to using the phone, to call your broker.
The online securities trading has been initiated in Malaysia since about a year ago, but it has not quite taken off, particularly due to the bearish market sentiments of late. However, stockbrokers must remember that the quiet market would not remain for long and should therefore be prepared for the turnaround of investors' sentiments.
So we believe that online trading will take off, and once it takes off, it will take off very, very quickly. So all of us who are either providing the content like Asia Stock Watch, or in the broking industry who are actually doing the transactions, I think it is important that during this quiet period of consolidation, that a lot of work is done to make sure that the systems are in place. Because when the sentiment turns and when people are scrambling, to trade in the stock markets, there will be insufficient time to prepare for the customers.
So we expect that in between now and June, when the commission rate goes down, most of the stockbroking companies will probably be preparing the infrastructure to take advantage of online trades, which we reckon will take up about 15 to 20% of the traditional trades.
For investors, the prospective lower commission rates from cyber stock trading is of course very much anticipated. Currently, discounts on commission rates are only given to institutional investors who trade in the millions. The deregulation would mean that commission rates will be fully negotiable, and this will leave retail customers with better bargaining power. The Kuala Lumpur Stock Exchange had last year announced that beginning September, commission rates for all trades above 100,000 ringgit would be made fully negotiable, while trades with contract value of 100,000 ringgit and below will be subject to a fixed rate of 0.75%.
However, by June is when the Securities Commission will allow stockbroking companies to, there will be a cap in terms of the commission at 0.75, but will be fully negotiable downwards. So that will open the floodgate for online trades to take full advantage of the liberalised commission rate, reduce cost to the retailers.
The next prerequisite is of course the infrastructure.
The next thing that needs to be done is of course providing the infrastructure so that people can have access to internet, especially quick access like broadband access, so that the time to load up for your information and your, say, online trading is fast.
The relevant authorities as well as industry players must ensure that users' convenience and satisfaction top it all, as the success of the online securities trading very much depends on consumers' confidence. Transaction security is of course the first thing that users need to be assured of. Fast access, user-friendliness, cost-effectiveness, and sound advisors are aspects that should be seriously looked into. And before you go try trading your shares online, here are some useful tips on choosing the right service.
Yeah, I think the things that the investors should look for is really, firstly, that the site or the service is properly run, properly regulated. You know, that's why an investment advisor's license is important, because as happened in the States, there are a lot of websites that just spread rumors, you know, so that the stocks can be played up and the insiders can sell. So I think that's number one. You have to look for a website that is authoritative, that is licensed, regulated, so that there's no monkey business. Okay. Secondly, go and look at a site that is very easy to use, that is not complicated, so that you don't have to go to school, you know, in order to learn how to use the website. And then thirdly is make use of all the tools and services that are available on the website to do your own homework before you invest. So it could be a matter of looking at the charts, looking at the company's balance sheet, looking at investor or analyst reports of those companies, you know, before you finally press the button to buy or to sell the company. And I think if you can do all that, then you should be a very happy investor.